The Income Tax Act is a thing being a person charged under the provisions of this act for the relevant previous year. The levy of income tax in India, the charge of income tax in India is governed by the Income Tax Act 1961. Every year, the income tax rates will be changed based on the situations and other concepts required as per the society. Warm welcome to 5th Sem B.Ba students of academic year 2023-24. The subject what we are going to discuss is Income Tax 1 of 5th Sem B.Ba. In this Income Tax 1, the topic or the chapter 1, we have here basic concepts of income tax. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram, First Grade College, Temple of Excellence, MYSURU. In today's session, we are going to discuss about what is income tax and how it came and what are the income tax are there, concepts are there and rules of according to the Income Tax Act 1961. We are going to discuss every part here. So every person knows that one. In your family, they'll be saying that one, they'll be discussing how to pay income tax, how to pay in this month, and how to pay this much of tax to the government. Why they have to pay the tax to the government? We, as an individual person, have to pay tax to the government for the usage of resources of the society. For that reason, I have to pay tax, and the source of income, whatever I have received here, on that source, I have to pay tax to the government. So these things we are going to learn. In today's agenda, we have the introduction, meaning, types of taxes, and conclusion, and what we are going to discuss in the next session. Say in the introduction, the income tax is a tax levied. Levied means charged. The income tax department is going to charge the tax on the total income of assessee. Assessee is a person. Here, according to Income Tax Act 1961, a person means he may be an individual, he may be an individual, HUF, partnership firm, joint stock company, body of individual, association of person, judicial, artificial judicial person. Like this person means here, he may be any one of this according to section 2 subclause 31 of Income Tax Act 1961. So here, the Income Tax Act is a thing being a person charged under the provisions of this act for the relevant previous year. Relevant previous year, according to the Income Tax Act, in the year where assessee has earned the income. That is nothing but financial year is nothing but previous year. Financial year is from 1/4 to 31st March for every person. For every person, the financial year is 1st April to 31st March. For understanding income tax law in India, the following components we can study easily. How many components are there? Here, based on certain things, we have taken 5 components here. The first component is Income Tax Act 1961, Annual Finance Act, Income Tax Rules 1962, Notification and Circular, and Judicial Decision. We'll discuss each and every element of these things so we can understand the concept easily about income tax. The first element is Income Tax Act 1961. The levy of income tax in India, the charge of income tax in India is governed by the Income Tax Act 1961. As per the rules and regulations framed under this Act 1961 are considered till today in the present scenario, which extends to all India and came into force on 1st April 1962. The Act was started in 1961, but it came into force from 1st April 1962. That's why The first previous year will be 1/4/1962 to 31st March 1963. This is the first previous year for the income tax. The Income Tax Act 1961 contains 298 sections. In this act, we have 298 sections and 14 schedules to take care of all the related information of the income tax related concept, where it can be easily understood by the tax administrator, for the tax structure, even for the tax collector and for the taxpayer. It will be easy to understand under which and why these rules are applied. So those things we are going to discuss as the requirement wherever it is necessary is there. It contains provisions for determination of taxable income. Income tax provides certain provisions to calculate. Determination is nothing but calculating what is the taxable income, what is the income is there, on which income a tax has to be charged on the assessee. These things will be clearly, with the support of provisions, we are going to calculate. And even for tax liability, assessment procedures, appeals, penalties and prosecutions. For every concept of this one, we have certain provision. Based on the provisions, we are going to follow the rules and regulations in the Income Tax Act 1961. This undergo changes every year with the additions and deletions brought by the Annual Finance Act passed by the Parliament. In India or in any country, the income tax rules or certain provisions or certain things will be changing every year based on the information passed by the Parliament in the Annual Finance Act. Annual Finance Act is nothing but, we have to understand in easy way, means the budget, what they are going to present in the Parliament in the month of February, and it is approved by all the members. Then only it will be considered for the next year's rules and regulations for the next year. Every year there will be at least a small addition or changes will be there or deletions will be there in the Income Tax Act. And these things will be done in the budget. So the second term, the second element we have here, Annual Finance Acts. What is this Annual Finance Act? Every year, finance bill is introduced by Finance Minister of the Government of India in the Parliament budget session. They're saying that one, Finance Minister is going to present all the financial concepts in the budget, and those things will be as per the Government of India in the Parliament's budget session. The Finance Minister is going to present all the information. When the finance bill is passed by both the houses of Parliament, gets the assent of the President, first the finance bill has to be approved by both the houses, Lok Sabha and Rajya Sabha. Both the houses of the Parliament gets the, and after that assent of the President it requires, it becomes Finance Act. Say, for any points which has to be introduced or any modification has to be made in both the houses, it should be approved. After the approval in both the houses, it will be approved by the President of the country, that is President of India. Then it becomes the Finance Act for certain rules and regulations which has been framed during previous year. Amendments are made every year to the Income Tax Act 1960. Amendment means addition or deletion for the changes required for the Income Tax Act will be made in the Finance Bill and other tax laws by the Finance Act. Finance Bill also mention the rates of income tax and other taxes given in various schedules which are attached to it. They are saying that one, every year the income tax rates will be changed based on the situations and other concepts required as per the society. So now every year the rate of tax will be changed here. A small modification will be given to the benefit of the taxpayer, and the tax administrator for the purpose of tax structuring get the information of the finance bill every year before framing any rules and regulations for the next part year. Therefore, though Income Tax Act is settled law, the operative effect is given by the Annual Finance Act. The Act is 1961 is settled, but for these things, every year in the month of February, the budget, in that budget, a finance bill will be proposed. Based on that, the Act will be used in the income of assesses, tax liability assessment and even for the procedures, appeals, penalties, or for any other purposes based on the Annual Finance Act, it will be levied or charged for the assessee. The third element what we have here, Income Tax Rules 1962. Say the Act was started in 1961, but the rules are framed in 1962. That is why we are going to call Income Tax Rules 1962. Central Board of Direct Taxes looks after the administration of direct taxes. In India, CBDT is the major department which takes care of the direct taxes, is empowered under Section 295 of the Income Tax Act 1961 to make rules for carrying out the purposes of the Act, and thereby frames various rules from time to time for the proper administration of the Income Tax Act 1961. They're saying that one, it is very simple. CBDT is going to update every year based on the requirement. The rules and regulations are framed, and it will be updated information will be given to all the assessees. And these rules were first framed in 1962. The rules of income tax was started and framed. Framed means designed and made a structured part here in 1962, and thereby collectively called Income Tax Rules 1962. It is very much important to read these rules along with the Income Tax Act 1961. If I want to understand the in-depth concept of 1961 Income Tax Act, then I have to read all the rules for the Act. Then only I am going to understand the concept of income tax easily. The power to make rules under this section shall also include the power to give retrospective effective, but not earlier than the date of commencement of this Act. Before this Act, there were no such rules were given or rights were given for the administrators. After 1962 rules, they started to give the power to the administrative department of CBDT to take care of the entire rules of the income tax, what and how it should be framed, on what grounds it should be framed. However, retrospective effect shall not be given so as to prejudicially affect in the interest of the assessee. Always to the support to the assessee only, all the rules and regulations are framed. Circulars and notifications. Circulars are issued by CBDT from time to time to deal with certain specific problems and to clarify doubts regarding the scope, meaning of the provisions. Every time, every amendment is made or the changes are made, either it may be addition or deletion in the Income Tax Act 1961. For everything, the Income Tax 1961, the CBDT, what it is framed, those department, administrative department will send circulars or notification about the changes taken place in the Act in the present previous year or the previous year of the anyone what we have any financial year. Like this, they're going to, based on this, they're going to send communication to all the assessee to know about what is the tax has to be paid for the present financial year in the next coming year, and what is the amount will be charged and which amount will be not charged, and what is the exemption limit benefit has been given to the assessee, or what is the exemptions are not considered in the present previous year. Every changes which takes place in the Income Tax Act, those information will be provided, means circulated to the assessees in the form of notifications. The next and the final element what we have here, judicial decisions. Every decisions cannot be taken by the parliament. For that reason, we have certain things here. Judicial decisions are an important and unavoidable part of the study of income tax law. For the parliament, it is not possible. See, already said, for the parliament, it is not possible to provide the issues that may arise in the implementation of any act. Means parliament cannot take or involved in the framing the rules and regulations in the act. For that reason, we have a certain judicial department or the things what we have here where they can take action in case of any issues takes place and the decision can be taken. The rights are being given to the Income Tax Act 1961, whatever we have for the things which may be on the various issues which happens in the society, for where an assessee fails to pay the tax or in any other issues are the part whatever we have. And the last topic of today's session, what we have here, types of taxes. Already you know, tax is nothing but an amount charged by the government for using the sources of or resources of society and received some income from the society. For that, they're going to charge the tax here. So in this one, how many types of taxes are there? So if they ask for 2 marks question, mention the types of taxes, then you have to write here direct taxes and indirect taxes. In indirect taxes, we have goods and services tax. In direct taxes, we have income tax, corporate tax, and wealth tax we have here. So if they ask question for you people, mention the types of taxes. You have to write direct tax and indirect tax, GST. So this is the thing what we have to write. And every part of this one we are going to learn in the upcoming sessions. Income tax, this is the subject what we are discussing. Corporate tax, we are going to discuss later. Related small information will be there. And the wealth tax and GST, you have a subject in your next sessions or in the next semesters for all the students. So now think that one, the GST subject is for BCom students and GST concept can be read easily and it is related to goods and services. In the upcoming session, we are going to discuss about types of income. So types of income is differ from heads of income. So carefully understand, we have 2 concepts here. Types of income differs from heads of income, which is very, very important topic which we are going to discuss in the upcoming session, which will be useful for our students to write the examination without any hurdles. In today's session, we learned about what is tax and what is Income Tax Act 1961, when was the rules was framed, and it is called as Income Tax Rules 1962. It was framed in 1962. That's the reason we are going to call Income Tax Rules 1962. Even the act was started in 1961, which is our first previous year. If they ask, our first previous year is 1962. 63 is the first previous year. First assessment year is 1963. 64 is the first assessment year of Income Tax Act. So this was the topic we have discussed in this session. Thank you to all my dear students. Which topics we have discussed are very important for examination point of view, even for other purposes also in your life.